All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and this is your recap for the last day of the month, February 28th. And definitely some selling pressure for month end, some big MOC imbalances that we're seeing, for month end selling or month end trading. So those hit pretty hard at the end of the day. For the most part, today was pretty weak, and it's just been kind of this, forgetting about the MOC, trades at the end of the day. This has kind of been the same pattern that we've been seeing. We had a couple days where we rallied for a few days and closed on the highs of the day, and then we did an about face and kind of turned back the other way. So clearly volatility is still heightened. I think as a trader, you just have to recognize this. Thought we made some progress where the VIX went down from the lower 20s down to about 15. I think it was the 15 handle, but we've ratcheted back up here to 20. So you could use this 50-day moving average, and you could say, hey, that's your signal for when you've got a confirmation that volatility is coming out of the system. But until that happens, you just have to recognize that you're in a higher than normal volatility area, and you can. There's plenty of different reasons, I guess, that you could look back, hindsight 2020 and say, yesterday, Fed Chair Powell came on and was I guess you could use the word hawkish, in the front of some weaker than expected economic numbers. For the better part of 2017, we've had a lot of upside momentum and upside economic surprises. Well, durable goods was horrible yesterday. And the housing number, existing home sales, was bad this morning. Chicago Purchasing Manager Index was also missed today. So we're starting to see some things kind of miss. And then you had China last night, which had a bad number as well. So this is a little bit different than what we've seen in terms of those economics. But if you're purely a technical trader and just watching price, certainly there's been a number of things that, again, look different than for the most part of last year when we had kind of a sector rotation. I was thinking that beginning of this week that tech might cool off a little bit, and then we might see some other groups participate. Well, that's not really happened. I would say the only thing that's really cooking right now in this market or doing very well is those tech and a couple different groups within technology. It's not just, the FANG stocks were really strong. And you could look at the FDN ETF to kind of look at the FANG stocks as a group. They've been pausing, which is perfectly fine, I think, after taking 52-week highs. So don't get wrapped up. I would not get wrapped up in this double top business. In the Qs, and I think this is going to start going around that there's a double top in the Qs. Oh my gosh, look at other groups within technology; they're not showing the same thing. And you go back, so it really depends on what group of stocks you're looking at. There's no double top in the FDN ETF, which again is a lot. The FANG stocks are your top names in there. IGV is another area where you're not so FANG stock heavy, but this is your enterprise software groups. This is tech and software. And look at this. This broke out. It did touch a 52-week high. Of course, I sent the chart out and top ticked it right around this afternoon. But so you can't really come up with that same thesis. I guess if you or it would be limited just to the Qs. But there's certainly a number of other groups like this that have shown some other strength. So we'll see what happens. Salesforce came out after the close. They were initially up and now down. But the problem that I have with this is that my thinking going into the beginning of the week was maybe some other groups were going to pick up the slack while maybe tech pauses for a little bit. But you look around and you certainly don't see that. XME Metals and Mining got hammered today, down almost 3% today. The steel names as well really came in hard today, down 3.2%. I think, again, this goes back to what I was saying about durable goods and weak China data. That's going to bring down steel stocks, in my opinion. And then also IWM, the small caps, which the biggest weighting in this is financials. So this has nothing to do with I know a lot of people like to say, who don't actually look to see what's in an ETF, they like to just make generalizations, and they say, oh, it's got to be the energy stocks and IWM. IWM does not contain a lot of energy stocks, believe it or not. It's not. It's just not a big weighting, so you really can't make that argument with that. If you go to IWM, just in case you don't believe me, but you could see that IWM. And if we go to allocations, it's either under allocations or organization, the banks and the REITs, biotech, software, these are your names. You don't even see energy in here. So clearly there's something else going on here. So I don't think you could just blame this on oil going down, which is, I believe, what CNBC just said. There's a lot of other groups that have nothing to do with oil that are a little bit weak. So I'm not happy saying that, but I think you just want to recognize here and tread cautiously until we kind of get out of this and recognize your stops and build cash a little bit. Of course, this kind of seems ominous down here in IWM, which I know I'm not one for making predictions that we're going back down and retesting the 200-day moving average. But clearly this was not a good signal. We tried to get into value for the month of February, failed, bearish engulfing, and then a huge move down today. So maybe there's a little bit of support back here. I don't have the 100-day moving average, which would probably be pretty smart to take a look at this and see what it looks like. With that, yeah, I think we actually just broke the 100-day moving average too. So, well, there goes that idea to see if there was some support there. So I think you want to honor your stops. There's a couple positions that I got into in cash, back on the retake, and I could certainly ratchet up my stops. Whoops, FDN may not come in here. I think I got in on the 50-day moving average. Maybe I want to use the 20-day moving average for a stop in FDN. EEM also has been pretty weak. That just broke back below the 50-day moving average. So again, not a lot of great things to kind of look at here in this video, but I think I said yesterday, hey, today might be a make or break day. And unfortunately, things kind of went down to the downside. Option activity, I was struggling today to find. I usually tweet out option activity around midday, and I also put that together in the Tribeca Trade Group room. And I was struggling to find like 5 orders today on the call side, and it was very, very, very quiet on the call side. Even in the afternoon, I mean, there's a couple small plays here. This is very, very tiny. So just keep in mind when you're looking at aggressive option activity, put the dollar amount, on some of these names. Microchip, there's a total of 3,000. I don't know for sure if they took down open interest, so I have to check that for tomorrow. But there was like a lot of 100 lots or 200 lots that added up to about 3,000 contracts. But still, I mean, this is really speculative stuff. This is March calls going up. Some of this stuff is fine for a day trade. I think the same thing with Lam Research. We saw just a tiny bit of Lam Research calls, but look at where Lam Research stopped today. And my take has been, over the last week, since we saw a lot of the end of day selling, I really have not wanted to put positions on towards the end of the day. So I've kind of just been sitting on my hands and the trades that I do take are pretty light in nature until the VIX really starts to subside. It just doesn't make a ton of sense, I think, right now, trading short-term options. And holding them when the VIX is over 20. It's just, to me, not the right environment to do that. So you just kind of have to wait and wait for the conditions to subside a little bit, the volatility.
In Washington politics, 1 hour after the meeting with Trump,
in regard
Rubio
to taking a lot of
expresses
positions
doubts on the
or
president's
sizable
gun plan.
positions. It's just not the market to do it. And again, here's where Lam Research, right on the top of value. So the value areas, and I was watching this, because we saw the calls, and I said, you know what, I'm not chasing this going right into the top of value, and it kind of saved me out of a trade today. So thank you, value areas, for keeping me out of a trade here. But that's it. I mean, there was, kind of odd that all these AIG calls are being purchased for March 23. EWW, which I don't like the chart at all, in Mexico. What else? I felt like there was one other order in the afternoon, but again, very, very quiet in terms of aggressive option activity. I mean, I guess you could find a couple other 100 lot orders and say those were aggressively bought, but you're really kind of reaching if that's what you're doing. So it was very, very quiet, and I would say it was more dominated by index put buying again today. Not huge index put buying, but just a couple orders that caught my eyes both in Qs and in IWM. All right, so that's it for today's video. Have a great night, and see you back tomorrow morning.